Welcome back. I'm Pratap here. Today is the 27th March 2024. In this video, let us analyze Bank Nifty with the help of supply demand zone chain. Even before that, a small announcement please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. All the training videos are available at our NeoStock YouTube channel. Even I kept all the videos in a playlist supply demand zone price action course. Even I have provided the link to this playlist in this YouTube video description. If you click the link, you will get into this page and then scroll down to the bottom of this page. Here, starting from lesson 1.1, all the training videos are available in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. Even I have provided the link to our Telegram channel in this YouTube video description. Please join in that channel. It will be helpful to you. Each time when we release a new YouTube video, we will provide an update in that channel. Now let's get into Bank Nifty analysis with the help of supply demand zone chain. So in previous video, yesterday's video, we have identified this range. And Nifty moved within this range in today's trading session. So from this 75 minutes high liquidity demand zone, Nifty moved with a gap, and then throughout the day it moved in this particular narrow range. And this supply, this 5 minutes high liquidity supply is strongly holding. Even just before, see the order flow is very strong just before this high liquidity supply. Prices never entered into this. So such a strong resistance it is providing. So, and as we identified in our yesterday's analysis, this 5 minutes high liquidity zone is holding very strong. Most probably tomorrow also the price movement might be within this area, but there are some changes from 75 minutes time frame onwards in today's trading session. First, let us move on to the 75 minutes time frame. A new 75 minute zone is created. First, let me delete this line. After that, we will draw. A new zone is created. See here, this is a hidden. Actually, it is a hidden zone. People think this is a this is a base candle, but actually this is a leg in candle. There is a hidden body. If you add the hidden body, this is going to be a drop. After that, you have 4 base candles and then you have a rally candle. Look into our supply demand zone chain on 75 minutes time frame. And today here, serial number 8. This is the one. You can pause the video and you can study these parameters. This is yesterday 9:15 candle is a leg in, and then 4 base candles, and today 9:15 we have a leg out. This is the way a new supply has been created today. Sorry, new demand, not supply. New 75 minutes demand zone. This is not a high liquidity demand zone, but this is a normal 75 minutes. But still it will hold the prices for some period. Because it supports hourly income trade. In hourly income trade, 75 minutes is the higher time frame. So this is the leg in, 4 base candles and a rally candle with a gap. But this is very close to this 5 minutes high liquidity zone, which is holding the prices for a long period. Now the question, tomorrow is it going to hold the prices? Or the market is going to open with a gap up and violates this zone? Or even with gap up, if market is very strong and go above this and it will get into the next zone. So all these things, all possibilities we have to observe only tomorrow only. But at this point of time, the movement is narrowed down. because definitely this 75 minutes, even though it is a normal zone, still it will hold for some period. Okay, now let's look into the next time frame, that is 25 minutes. Let us check any high liquidity zones are created in the 25 minutes time frame. So I'm changing the time frame to 25 minutes. I'm generating the chain. Meanwhile, here also we will change the time frame. Okay, 25 minute zone is ready. And today, two 25 minute zones are created, 8 and 9. You can pause the video and you can study these zones. And both are normal demand zones only. And one is a fine-tuned zone. This is the one. Two base candles. Here, we have a drop, two base candles and a rally candle with a gap. So it's a fine-tuned zone. There is one more, 1352 base candles. Here, this is again two base candles and again a rally. Here another 25 minute zone is created. So you can mark those zones for your tomorrow's trading point of view. But I am showing you these zones. You can mark them on the charts. Why I am drawing is mainly we focus on high liquidity zones to find support and resistance. Now let's move on to 15 minutes time frame. Let me generate the chain. And even here I will change the time frame to 15 minutes. Here you see, you have a leg in. This is you can use this ERC candle as a leg in, base and rally with a gap up. You can draw a 15 minute zone. You can fine tune inside 75 minutes. You can fine tune with this 15 minute zone. This is a normal demand zone. We are just fine tuning this 75 minute zone so that we can understand from where orders will pick up. So the chain is ready. Are there any high liquidity zones or any zones created today? We have only one 15 minute zone is created, nothing else. Eighth one. The same thing we have drawn. This is the leg in, base and rally, the same thing, nothing else more. And now let's look into 5 minutes time frame. Let me change it to 5 minutes time frame. This is a ERC, failed ERC candle. So the 5 minute structure is not good inside 75 minutes. That means we can't say there is a strong order flow within this fine tuned area. But the only thing is there is a pro gap area here. Is it filled? Not completely filled. Some more order flow is here within this gap. And from where this order flow is started, here we can draw like this. We have a drop, 1, 2, 3, 4, 5 base candles. This is the way we can draw 15 minute zone. Because the depth is high, definitely our software would avoid this zone because the depth is. But actually order flow is started from here. Inside the 75, the fine-tuned area. So overlap 15 minutes demand zone and this is the 5 minutes demand zone. Sorry, not 15 minutes, 5 minutes. And this 15 minutes demand zone, orders are picked up from this 5 minute zone. Maybe somewhere here some order flow is there, but I don't know how strong it is going to be. Okay, any 5 minutes zones are ready. Any zones created as per this? Today is 27, right? Yeah, here we have a zone, 27.3. But this is a piercer zone, so we don't bother about this. So this is the current position. So what could be our tomorrow's trade plan? Suppose if this 5 minutes high liquidity supply zone is holding the prices, tomorrow we can expect a range like this. The initial range. Within this area, probably the prices will be moving tomorrow. Okay, this is the range. And if suppose if this is violated, the next one again the range will be moved from here to here. Suppose this is holding and this 5 minutes high liquidity is violated. Next the range will be moved to the next level. Here we have 25 minutes high liquidity, 15 minutes high liquidity, 5 minutes high liquidity. All these are all high liquidity zones. So probably the range will slightly move to the higher level. So this is the way you can plan your trade setups tomorrow. And also please do not forget, tomorrow is a monthly expiry F&O segment, and tomorrow is also financial year last trading session for this financial year. So that way we never know how the market is going to be. There could be high volatility in the market, then we may see one of these zones we easily violated. If market is having a very low volatility, and probably within this range only market will move. That we will understand after tomorrow's market open. Hope this information will be useful to you for your further study and analysis. Let us all meet again in our next video. Thank you.